Welcome back. In this Palantir stock update video, I want to highlight a few more pieces to the puzzle for the bull case of this company and outline the near to medium term potential that is likely to be realized over the coming months as PLTR potentially breaks out to new all-time highs. Let's go. The investment thesis. Palantir, as a big data company, has two established verticals, government and commercial, their Gotham and Foundry platforms respectively. Palantir management has put forth achievable and sustainable target growth rates while also giving investors enough of an outlook into the future. The bull case here revolves around the signing and retaining of many long-term contracts. If you're in this company at a reasonable valuation, as I see it presently trading based on its current revenue multiple, which I'll talk more about later, you can expect a strong return, in my opinion, in the coming years. Efficient operations. Palantir has minimal needs for CapEx to grow its revenues. Just listen to the executives explain this.
So how do we accomplish this ambition of being the central operating system for the modern enterprise? Well, we install our platforms. And install is a very important word here. All enterprise software requires installation. And there are different philosophies around this. We have chosen to internalize the cost of installation. So we sell our software with a subscription fee, but the installation is a cost that we bear. And we do this for two reasons. The first is that this creates a ruthless economic incentive for us to continuously decrease the overall installation time by applying R&D against it. And we're pretty good at that. Over the last year alone, the average customer onboarding has fallen by a factor of 5. We can now onboard customers in less than 2 hours. We continue to see significant reductions in the intensity of these deployments from software-defined data integration investments that we're making. But the second reason that we internalize the cost of installation is much more strategic, and it has to do with the nature of our software. We think of our platforms as internal software aggregators in the Ben Thompson sense of the word aggregator. We are aggregating the supply of all the data in the enterprise. We have the greatest source of truth, well-modeled, ontologized, with security built in. And we are aggregating the demand in the form of all the users who make operational decisions. And so to accomplish this, we have to onboard a critical mass of the enterprise onto the operating system. And once you are at that critical mass, the software does the work from there. In effect, you can walk away and stop investing in installation while remaining completely confident that the software will provide ever-increasing value. Hitting that threshold means that our software is the most logical place for the enterprise to implement the next marginal application, because they have already amassed all the data, and this is where their users live and make operational decisions all day long.
Palantir's investment in capital expenditures is in the tens of millions despite closing in on $1 billion in revenue. Simply put, its CapEx requirements are roughly 1% of its revenues, something that only continues to prove the power of PLTR's earnings as a software-first business. Also, Palantir is steadily improving in its march towards profitability with a 13% margin, and once we get beyond the stock-based compensation associated with its direct listing, 2021 could see some immense progress on that front of the business. The valuation. I like it. The main thesis at $50 billion is a play on steady growth rates in 2021 for PLTR and continued favorable guidance. Assuming that Palantir grows its revenues in 2021 by 35%, that growth rate means its revenues could reach $1.4 billion, putting the stock trading for 36 times its forward revenues. And that's really not an expensive multiple for a SaaS stock. Now, Palantir is not 100% a SaaS company, but they do have SaaS components such as Apollo, which I'll get to more in a future video. And the software as a service components really come into play when customers get locked in for many years in big contracts for Palantir's platforms. And I see Palantir as a really well-managed company. Even though the market seems unsure at this present moment of Palantir's potential, I still see a very compelling investment opportunity here. Investors should think of the roughly $50 billion market cap while not putting too much consideration on the negative bottom line, which we know is due to stock-based compensation being on its income statement. Therefore, taking all of that into account, I am comfortable adding to my position even in the 28s. And I'll get to more on the short-term trading in just a few minutes. But first, I want to play a clip from The Street featuring Jim Cramer. Is PLTR like TSLA? So this is just a quick snippet that I'll play for you now and dissect once it's over.
Jim, when you scroll through Wall Street bets on Reddit, many Redditors love Palantir. I'm just wondering if Palantir could ever get close to Tesla when it comes to getting these passionate investors in it.
Well, no, I think because Palantir in the end does secret stuff. And it came at 10, it attracted a lot of people. I know the Reddit people are really good nuts for it, but we're not going to really know what they do. And they can beat the numbers, I guess. But Tesla, we all want one. And that's why Tesla was so great. And Tesla became a technology stock, and the guy fell in love with Tesla. It's kind of just considered a SPAC for Elon Musk.
So there we have Jim Cramer saying that the Palantir story is in no way correlated to the Tesla one. And in the simplest way, I have to agree with him. But they are two completely different companies doing completely different things. But at the same time, I've made the reference a few times before, and I don't think it's all wrong. If Palantir continues its past success and is able to carry forward strong growth rates and increasing market penetration, PLTR could be on its way to becoming an integral part of many countries' technological infrastructure, just as Tesla is disrupting the transportation infrastructure when it comes to electric vehicles. I see both having a similar stock return, and I think, but this is just my opinion and should be taken as such, that both TSLA and PLTR could conceivably 10x this decade. So, in many ways, with bold leadership and lofty yet grounding missions, both companies are more aligned than one may initially believe. And I think, as the Reddit community Wall Street Bets has shown us, there is demand for a company more focused on the governmental side of things. I see PLTR as a way to diversify slightly away from the consumer growth engine that is Tesla's car business. And I think many others will come to see Palantir as a nice addition or complement or supplement to an existing portfolio focused around other growth stocks. What I'm trying to say is that I think there is certainly a place for Palantir to be richly valued and well respected in the market, but we have yet to see that play out. So until then, there will be that gap of opportunity, of course, with risk. I'll put out a 2021 PLTR predictions video shortly. Short-term predictions. We've gotten a lot of positive news for Palantir recently. Palantir just signed a new 2-year contract worth $31.5 million with the UK National Health Service, where Palantir Foundry will provide the NHS with a software platform for the secure, reliable, and timely processing of data, while protecting the privacy of patients. The NHS will continue to use Palantir Foundry as part of its COVID-19 response, including the planning and operational rollout of the UK's vaccine program. And Palantir also recently announced that the U.S. Army's Program Executive Office for Enterprise Information Systems will execute the second year of the pre-existing partnership, and that deal has a total price of $113.8 million for the year. Army Vantage is, quote, a comprehensive data analytics platform to facilitate data-driven decision-making, end quote. To me, it looks like Palantir stock is going to be in a little bit of a holding pattern without a catalyst in either direction, even with this positive news, until a breakout once the lockup period clears. PLTR in the mid to high 20s is where the market wants the stock right now, and it's right in the middle of the trading range for the past few weeks. Medium-term predictions. In the near term, I'm confident that PLTR will stay above $20 per share, barring any catastrophic news, even though the lockup period is soon to expire in the coming weeks. If strong growth continues and Q1 2021 is just as strong, I see a viable path towards $50 per share in the medium term. And remember that Palantir recently announced that it will hold a live demo day on Tuesday, January 26th in 2021. I think this event is going to be so insightful for the future of this business. We'll get an inside look into Palantir's enterprise data platforms used by organizations to handle their data environments. and it might not be a catalyst, this event alone, for the stock, but it could wake up some analysts once they get to see what this company is all about. So I'll leave it there for now. Drop a like if this analysis was helpful to you, and subscribe if you haven't already. Until next time.